This video covers Sony's financial results for the first quarter of fiscal year 2025, from April to June 2025. Sony is a Japanese multinational conglomerate with operations in consumer electronics, gaming, entertainment, and semiconductors, best known for its PlayStation gaming consoles. FY2025 first quarter results. Sales for the first quarter rose 2% year-on-year to 2,621.6 billion yen, while operating income grew 36%, both marking record highs for a first quarter. Net income also increased 23% to 259 billion yen. Progress rate against annual net profit forecast is 26.7% already. Sony tends to generate higher profits in the third quarter, so if the current trend continues, there could be another upward revision. First quarter results by segment. Game and Network Services segment led growth with record sales and operating income. Music achieved higher streaming revenues and profit, while Pictures saw lower sales but a sharp rise in profit from TV productions. Entertainment, Technology, and Services declined due to weaker TV sales, whereas Imaging and Sensing Solutions grew strongly on higher demand for image sensors. FY 2025 revised forecast. Sony raised its annual operating income forecast by 4% to 1,330 billion yen, and its net income forecast by 4% to 970 billion yen. In addition, Sony increased its operating cash flow forecast by 2%. Impact of additional U.S. tariffs. Sony acknowledged recent U.S. tariff developments while noting ongoing uncertainties. Due to a reduced impact from these tariffs, Sony now expects a 70 billion yen hit, down from the previous projection of 100 billion yen. Production diversification is nearly complete and is expected to be finished in the first half of FY 2025, with measures to mitigate the impact continuing. Game and Network Services segment focuses on video game development, console sales, and online network services. Game and Network Services segment grew strongly in the first quarter, supported by higher sales of third-party software and steady growth in network services. User engagement on PlayStation continued to rise, with more players and longer playtimes than a year ago. This momentum helped the segment achieve record operating profit. Looking ahead, Sony expects continued gains from network services, stronger contributions from first-party titles, and ongoing cost efficiencies, leading to higher full-year forecasts. Music segment produces, distributes, and markets recorded music, music publishing, and related content. Music segment grew in the first quarter with higher streaming and mobile game revenues, partly offset by currency effects. Operating income also increased. Streaming revenue rose solidly in both recorded music and music publishing, leading Sony to slightly raise its full-year sales and profit forecasts. Pictures segment engages in film and television production, distribution, and related media businesses. Pictures segment saw lower sales but sharply higher profit in the first quarter, driven by more TV production deliveries. On July 24th, Sony announced a strategic partnership with Bandai Namco. Bandai Namco is known for video games, toys, and anime, including franchises like Pac-Man, Tekken, and Gundam. The two companies will co-create new IP, collaborate in anime, manga, and merchandising, enhance marketing through shared data, and deliver new condo experiences by combining Bandai Namco's venues with Sony's technology. Entertainment, Technology, and Services offers TVs, audio products, and other consumer electronics, as well as entertainment technologies. In the ET&S segment, sales fell compared with the same period last year, mainly because fewer TVs were sold and foreign exchange rates had a negative effect. Operating income also declined, reflecting both the lower sales and the currency impact. Imaging and Sensing Solutions develops and sells image sensors and camera modules for mobile devices and other applications. In the INSS segment, sales grew compared with the same period last year, primarily due to increased shipments of sensors for mobile phones and digital cameras. Operating income also rose, as the boost from higher sales outweighed the negative effects of foreign exchange rates. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 4,094 yen as of August 21st, and the US dollar stock price is $28.12 as of August 20. Sony's stock price also has been steadily rising. Current PBR is 2.96 and PER is 25.3. Dividend yield is 0.61%. Compared with recent years, the current stock price looks relatively high in terms of both PBR and PER. Sony, like many other Japanese companies, has been steadily increasing its dividends each year, which makes the dividend yield higher than in the past. Conclusion: Sony delivered record first-quarter results, led by its game and network services and imaging and sensing solutions segments. Music also performed well, while pictures gained from TV productions. Although entertainment, technology, and services declined, overall momentum remains solid. With higher forecasts, ongoing cost efficiencies, and strong PlayStation engagement, for now Sony is well positioned for further growth, despite uncertainties around U.S. tariffs.